quick. I want to thank.
Good afternoon, everybody. How's everyone doing?
Great.
Good energy in the room. Linda came up. Linda Bozica's come up to join us all the way from. Linda, you live down in Melbourne, so come all the way from Melbourne to visit with us and share with us information about what direction. Are you curious to know what's going on with you? I know I am. I can't wait to hear all this stuff. So Linda, thank you so much for coming up here to join us today. Also want to thank Gary and Shannon and Amanda and Kevin Noel and everyone else who has been responsible for putting together our training calendar. You guys have done an amazing job. So thanks everyone for being here. Relax and enjoy. Get your questions ready. Linda, it's all yours.
All right. Well, good afternoon, everyone. It is a pleasure to be here. I did bring desserts for everyone. I believe in Go Big or Go Home, and so there's plenty of desserts. And I bring food purposely to share with you that unfortunately I'm not going to be giving you a lot of good news today, so please enjoy the desserts that I brought to you, okay?
So I pass the brownies up.
They will either put you in a sugar coma or have you actively participate, which I'm hoping is the latter. I've been talking non-stop insurance for the past 2 days while I've been up here, so I would love to have audience participation and lots of questions today. Rich, can you show the slide?
Oh, I'm sorry.
That's okay. So as you all are aware, there are a lot of challenges. Can you see me? I feel like I'm fighting the pole here. Okay, I'll move around. Okay, good. So there are a lot of challenges going on in the insurance industry, and they have been for the past couple of years. Last year alone, we had 6 big carriers closed. That is huge. In my career, I have never seen any other than one company close. So to have 6 in 1 year close was huge. They went insolvent, belly up, and closed their doors. When that happens, we need to rewrite all those policies that we had with that company in that book of business. So not only are we writing new policies and trying to retain the business that we have on the books, but when something like that happens and a wrench gets thrown in, we're rewriting that whole book of business of the carrier that closed. So it's been really crazy on our end under normal circumstances, let alone having carriers close. This year already, at the end of March, UPC, otherwise known as United Property and Casualty, they have also closed their doors. So here we go again. We had about 100, 120 policies with them that needed to find new homes, no pun intended, to rewrite that, all those customers with insurance. So as you can imagine, it has been nuts. In addition to that, insurance carriers need to get reinsurance. That is to make sure that they have enough coverage and money in their reserves to pay out on damages, especially if we were to have a catastrophic event happen this year. Reinsurance is due in June, so all the companies are trying to get reinsurance. If by June they cannot get enough reinsurance, cannot afford enough reinsurance, or cannot get enough to continue their high rating standard, financial stability rating, then we might have more companies closing after June. So, I mean, it is really crazy. Fortunately, we are a broker. We write for many different carriers. I was talking to Richard about Brightway. We're basically like a Brightway, but we're down in Melbourne and we're connected to the Watson family. But we have a lot of different carriers that we can write with. So last year, there were 2 special sessions in Tallahassee. One in May, one in December. Some good things came out of that special sessions. Unfortunately, we're not seeing a lot of impact yet from the things that came out, but we are very hopeful and looking forward and hoping that, moving forward it will help. One of the things was one-way attorney fees. So in the past, if a client turned in a claim for hail damage on their roof and the claim was denied because in fact there was no hail damage on the roof, it was a 20-plus-year-old roof that really needed to be replaced. The insurance company denied the claim. The homeowner went to an attorney or went to a public adjuster who went to an attorney. The attorney could charge whatever they wanted to. So in that scenario, and this is no bashing against attorneys or roofers or whoever, simply a fact, the attorney could charge whatever they wanted to. So this $10,000 roof claim came into a $70,000 claim. that the insurance company ended up having to pay, which is why so many carriers closed last year. So you see what's happening here. The one-way attorney fees have ended, so they can no longer charge whatever they want. Have you all heard of AOBs, assignment of benefit? Has anyone heard of that? Okay. So prior to now, because AOBs are now prohibited, thank goodness. So what was happening is a roofer would canvass the neighborhood. Again, no bashing against roofers. A roofer would canvass the neighborhood and come to your home and say, hey, I got your neighbor a free roof. Would you like me to check out your roof, see if you have any hail damage from that storm we had back on November 3rd of 2022? And I'll see if I can get you a free roof as well. Well, the homeowners, sure, So they go up, come back down. Of course, he found hail damage. And the roofer says, sign here, sign this form, I'll take care of everything for you. Well, to the homeowner, that sounds very convenient. They don't have to deal with anything, they don't have to call anybody, they're going to take care of everything. So the roofer now has all the rights. The homeowner has just signed all their rights over to Mr. Roofer. He turns in the claim to their insurance company. The adjuster comes out. Here again, there is no hail damage on the roof. It is a 1. There is no damage at all, or just a small area. Or it's an older, over 20-year-old roof that has wear and tear and needs to be replaced. So when the claim is denied by the insurance company, the roofer then can go to a public adjuster or go to an attorney, and then you know the rest of the story with the one-way attorney fees. So all of that with the AOB, assignment of benefit, those forms are now prohibited. We are so happy about that. Some of the companies are giving arbitration discounts. Basically what that means is if you promise not to sue your insurance company, if they deny a claim, they're going to give you a discount. That does not mean that you can't argue the fact that they're denying a claim or you can't take it to a public adjuster. They're just saying that you're not going to turn around and sue your insurance company for however many dollars, and they will give you a discount for that. So hopefully some of these things are going to prevent some of the fraudulent claims that have been happening. A couple of the things that are coming down the pipe too is, in the past, you had 2 years in which to file a claim against your homeowner insurance. I don't know about you all, but I don't know what I had for lunch last Tuesday, let alone what damage I had to my house 2 years ago. So now you have 1 year in which to claim damage. And I understand sometimes you might not even realize you have damage right away, especially if your home down here is a secondary home. The insurance companies used to have 14 days in which to review and acknowledge a claim. Now they have 7. And they used to take 90 days to pay or deny a claim, and now they have 60. I think these items are really good because when you have a claim on your homeowner insurance, you're anxious, you have damage, you don't know where to go, where to start, if it's going to be paid, if it's not going to be paid. So I think crunching down these numbers and the time frame is a good thing. Y'all agree? Okay. I'd like to talk about citizens for 1 moment, please. Take a sip of water while you let all that sink in. Yes.
It wasn't Heritage one that closed to.
No, Heritage is still open. Yes.
I do have a quick question. Should we write all this down, or are we going to be able to have the slides? Will you send us the slides? Or
Yes,
should we just take all of
Rich will be happy to distribute the slides.
Because it's a
Right
lot.
next
I'd be
to it.
happy to distribute the slides.
Well, I figured if it's not on the slides, I'll probably just do it.
Yeah,
One of these is a 14 years, under 10 years. Did they change that?
we did not, and we will get to that.
Oh, okay.
It's good
Okay.
stuff.
All right, so I want to talk a little bit about Citizens, our wonderful state insurance carrier. We think of them as the insurer of last resort. They think of themselves as the insurer of last resort. They are growing and they don't want to grow. So there's certain criteria. We just can't write Citizens Insurance for anybody because they want Citizens Insurance because their neighbor has it as the cheapest out there, or they heard that it's the cheapest insurance. When we go to quote, we run the information through all of our companies, and if Citizens is 20% less in premium than any of our other carriers, then we can write with Citizens, okay? And that comes now for renewals as well. It used to be 15%, now it has changed to 20%. So I feel that they really want to control all the business that they're getting, and they're getting the business because we have nowhere else to put it, because we had 7 companies close. So it's kind of all making sense. In addition now, do you have a lot of flood zones up here? I mean, I know I crossed a bridge over a big body of water to get here, so.
Florida is a flood zone, I think.
Exactly, it's a peninsula, okay. So, with Citizens, one of their new requirements now is that if a property is in any other flood zone other than X, which X is the lowest risk flood zone, if a property is in any other flood zone, that property must have flood insurance if we're going to write the home with Citizens. So it must have an accompanying flood policy, and Citizens doesn't offer flood insurance, so it would have to be through FEMA or private flood, but that's something that just started this year. So any property that's in a flood zone other than X, and we're going to write it with Citizens, must have flood insurance also. Now, my thought, my opinion in 2 cents worth, is that if you're paying X for homeowner insurance with Citizens, and now they're requiring that you have to have flood insurance, is that going to kind of equal out your money out of pocket that we could have written you with another company anyway, because the same money is coming out of your pocket? Exactly. Now, I understand if there's a lender, the lender's going to require that you carry flood insurance also if you're in a high-risk flood zone. However, in 2027, every Citizens policy is going to be required to have flood insurance regardless of what flood zone it's located in. So even if it's in a low-risk flood zone X, if we're writing a policy with Citizens, it must also have a flood policy to be accompanying it. And again, I think they're trying to control, their growth because of that. Because it does kind of make sense if you have to pay for flood insurance. And the standard flood zone X flood insurance premium used to be $350, then it went up to $463, and now it's closer to $600 and $650. So I mean, it's climbing just as everything else. So, with all that being said, unfortunately, we are not seeing a lot of impact yet for all these changes, and all the things I've mentioned thus far came out of the special sessions. So we aren't seeing a lot of impact yet, but I certainly hope that, as time goes on over the next couple of years, we will see things getting better. Unfortunately, it's probably going to get worse before it gets better, I hate to say. But at least there were some things done in Tallahassee to help our cause. So our industry is changing daily. We want to be your resource. We want to be there for your issues. We want to be there for any concerns that you may have. I talk a lot about being part of the Watson family. We put Watson family members on top. If we have a lot of quotes coming in, but if you call us with a quote or send a customer in and we know it's Watson related, we push that to the top. We are there to help you with the deals. We're here to help you in any way that we can. We work hand in hand with Watson Mortgage every day. So I can't stress enough how, we are here for you. All right, moving on. Does anyone have any questions on the Tallahassee stuff that we just spoke about?
Well, I don't know if this is part of that, but who decides the reissuance? Is that their insurance commission?
The reinsurance?
Well, yes.
Okay, so the reinsurance is the insurance that the insurance company has to buy to make sure. And they usually have to go to Lloyd's of London or, across the pond to purchase that.
Really?
That is a great question. Now, I have a little funny story. I haven't traveled up here in a long time. I think it was 2019. In my bag, I found 2 gift cards. And so you guys are lucky because she was the first one to ask a great question and participate. I'm going to give you a choice of your gift card. I don't know how much is on it. I don't think any is expired, but I say
Kind of like a lot of junk, right?
Joyce, you have to send it out and let us know.
Of course.
Joyce, now you have to check it out.
And that is a great question. We were talking earlier that there are no dumb questions, there are no silly questions. When I brainstorm with my staff, I always start the meeting that way. So that was a great question. And if you ask something that I don't know, I will be honest and tell you, because I know a lot, but yeah.
We have a lot of mobile homes in this area. Are you going to talk about that?
I can. when I get finished with the second part, will you bring that up again? I'll share what I know.
Just curious, do lots of employees get a discount through this insurance or no?
No, I wish.
I could have
but no.
told you that. That's a question.
Yeah, we don't even get insurance, being insurance agents on our homeowner, no, we do not. Any other questions before I go on?
I do have a couple, and I think most of them probably apply. I actually just got a quote from you guys. And, so this was surprising. One of the things she pointed out to me about this company is that after like 6 years, like, they actually wipe out your hurricane deductible?
They do.
Does anybody else do that? Like, I just hadn't heard that before, and I'm like, well, that would keep me interested.
Right.
So she's speaking about Frontline Insurance. That's who I have personally for my own insurance as well. So if you do not turn in any non-hurricane claims, so hurricane doesn't count. If you don't turn in any claims for 5 years, being lightning, fire, wind, theft, if you are claims free for 5 years, your hurricane deductible becomes zero. Now, how it really works is you have to still, if you have a hurricane claim, you still have to pay or deduct your hurricane deductible, which could be $5,000 or $6,000, but then they reimburse it back to you. So inevitably, your hurricane deductible becomes zero. And they are the only carrier that I know
So
of
they
that
were
does
like, it
that.
seemed like they were the lowest, and they had that. I'm like,
Yeah, they're great. I've had them forever. Yeah, Frontline, yeah. We have another carrier, Cypress, who, if you can't afford your hurricane deductible, because, for granted, it's gonna be probably 2% of your dwelling coverage, so it could easily be $4,000, $5,000, $6,000, $7,000 for hurricane deductible. If you cannot afford your deductible, they will loan that money to you interest-free, and I believe you have 2 years to pay it back. So, I mean, we do have some companies that are really thinking outside the box, and they both have been doing that for quite some time, so I think it's great, because we gotta do something, you know, down here. So, yeah.
Well, I know this isn't necessarily your bucket, but a lot of people, when we talk to them, they're gonna call State Farm or Allstate, or some of these national companies. Are they seeing the same issues that you're seeing with all of the carriers you carry? Are they affected the same way, where they're worried about cancellations and super price hike, you know, every day something?
Everybody, especially in the state of Florida, everyone is dealing with the same crisis down here. I mentioned in my meeting yesterday that I believe in every other state last year, the average number of insurance lawsuits was 2. And in Florida, we had like 134,000 or something. I mean, it was just ridiculous. But especially in Florida, everybody's in the same boat. Or I should say, everyone's in the same storm, but in a different size boat. To my knowledge, Allstate and State Farm are not, they provide homeowner insurance, but they're not writing insurance through Allstate and State Farm like back in the day. They can provide you with homeowner insurance, but it might be through Citizens or through another carrier, just like we do too. It never used to be like that. If you had Allstate, you would have Allstate auto insurance and Allstate homeowner insurance. You know, and then there would be a discount for bundling that.
So a lot of State Farm quit insuring homes.
Right.
Yeah.
Well, that's what I'm saying.
They used them for years.
Right.
And then they're begging for you to come back a few years
Well,
later.
sure. Yeah, exactly. Yeah.
Yeah, so, because another question, I had a prior client call me and say, Ray, I need help, I just found out my mortgage company just called me and my insurance company dropped me, like I don't have insurance. Can they do that? They just like drop you and like?
Was it within the first 90 days of the policy?
No.
Okay.
And he has multiple homes, so I guess he's like, I don't know, maybe something came to the house, but I didn't see it. I don't know, I mean, how does that work if somebody?
They cannot just drop you, they could not renew you, or they could cancel you within the first 90 days of the policy, and I'll get to that later.
Okay.
Okay? Yeah.
Do you offer deductible insurance?
What do you mean by that?
Well, back when Irma happened, we actually took out deductible insurance on our policy,
Okay.
and we were able to get that, and it covered the deductible when we were.
Oh, the hurricane
I never
deductible.
heard of it. Oh.
We do not have anything like that unless the particular carrier has something, like an endorsement on that policy that would take care of it. I would imagine, I hate to say assume, but I would imagine that you paid a little bit extra. And was it a separate policy altogether, or was
Yes.
it added on to your
Yes, we
home?
paid $241 for that year,
That's great.
and we got the deductible.
That's wonderful. Thank you for sharing. I mean, I know a lot, I've been in the business a long time, but I always love to get questions that I don't know the answer to, because I'm human. All right, any other questions on what we've talked about thus far, about what happened in Tallahassee and the changes that are coming down the pipe? All right,
I
one
do,
more?
I don't know if this applies now or later.
Okay.
Because my other question is, so I do a lot in St. Augustine, and so, and when I was here before, I didn't really do a lot of the beaches, you know, it's a lot of higher end stuff. And as I'm showing and learning from other agents, like one of them brought up about, well, this still has $150,000 left on the draw. And I'm like, what does that mean? And then he starts to explain to me that like FEMA, I guess, is $350,000. And then if you have a hurricane, you need a new roof, you can draw whatever. You need $30,000 for that, and then you need new flooring, you draw. And he said, but after like, when the 350's gone, like you can't get, FEMA won't insure it anymore. Like they're like, if you've had all these draws and used up all this money, you need to just buy a house somewhere else, I guess. So I'm just curious about that, you know, and does that just apply on certain flood zones, or is it just anywhere? So I don't know if you're gonna get into any of that, but it just seems like it's like growing more and more important
I will.
to know.
That's a lot. I will try to remember everything you said. So
Okay.
the regular FEMA flood policy provides $250,000 on the dwelling and then $100,000 on personal contents inside. Now the definition of flooding is not rainwater falling from the sky and gets into your home and your kitchen's wet and you have a flood. The definition of flooding is rising and flowing water. So it rises regardless of why. The storm sewers weren't working, your street floods, it comes up your driveway and into your house, whatever. So rising and flowing water is the definition of flood. So if you have flood insurance and you have a warranted reason to file an insurance claim under your flood insurance because it was rising and flowing water, okay? You have $250,000 on the dwelling, okay, and then $100,000 in addition for your personal contents. So let's say you had damage to all of your flooring. First of all, that check most likely is going to be made payable to you and your mortgage company, okay, if you have a mortgage. Then let's say you have damage to your flooring. They will relinquish some of that $250,000 to you until 25% of the job has been replaced. Then they will relinquish a little bit more to you until, let's say, flooring's replaced, it started going up the drywall, so the drywall needed to be replaced. So they disperse it, the mortgage company, who you signed the check and then you sent it to them. So it's basically to make sure that you are having the repairs made to your home to protect the collateral for your mortgage.
Right.
So when you're talking about a draw, that's the first thing that I thought of when you were talking about the draw. And then once you're done, you're done.
But then my thought is if you only have $250,000 and you have $500,000 in damage, you're not independently wealthy, you're kind of like, just like really, like, and then that house can't, like, nobody can buy that house.
So there's a couple different options. That is through FEMA.
Okay.
If you're going through FEMA and you know that the max is $250 and you need to have more, or your lender is wanting more, then there's also something called an excess flood. So we would write a standard flood policy and we would write an excess flood policy. Sometimes the lender is good with just the flood policy. However, did Mark leave? Okay.
It's coming right back.
Okay, so, you know, if $250 isn't enough to cover the mortgage, the lender might also require that you have an excess flood policy as well. Now, we also have a private flood market, which is not through FEMA. They can go higher than $250, and many times it's cheaper. It's just not backed by the government.
You need more, you need to ask more.
No, it's fine. Yeah, sure.
Is it true that, other houses around you have to experience the same
Yes,
thing in order for you to take advantage
Yes.
of that insurance?
yes. So not only is it rising and flowing water, I believe it's two homes adjacent to you have to suffer the same thing.
So a total of 3.
Yes.
So if you're the lowest and the only one that gets hit, it's on you.
But I mean, and many times that's not.
Right,
It's usually.
Normally, if you're gonna get hit, it's a block that's gonna get hit.
Exactly, exactly, yeah.
Not tornadoes.
Do you do commercial insurance? I have somebody ask me that.
Yes,
You
we
do?
absolutely do.
Okay.
Yep, we absolutely do. So what else about flood? I talked about the regular policy at $250, excess flood if you need it, private flood. We do have some carriers that will endorse flood right onto the homeowner policy, which is awesome because when it's endorsed onto the homeowner policy, it's most likely going to be cheaper, and the limit of the home dwelling coverage on your homeowner policy is going to be the same on the flood. So let's say you have a $600,000 dwelling coverage on your home policy. If you endorse flood on there, it's going to match the $600,000 as well for flood. And you'll have the same deductible as you do on your flood, or on your homeowner policy. And instead of paying, I don't know, $600 or $800 a year, you're probably going to pay closer to maybe $3 or $4 as an endorsement. So if you can get a policy, American Integrity is one of them that endorses. Oh, look at you! It's like yay! So American Integrity does offer the flood endorsement. So
I have a question, does this say, we used to hear like if it's clean water, it's not under flood, and if it's dirty water, it's under flood. Is that really true or no?
well, there's 3 different types of water, of contaminated water. There's clear, gray, and then really contaminated, and I'm not really an expert on those 3 types, but they do look at that when they look at the damage to see, is it sewage water, is it rainwater, just to see how much cleaning up would need to be done as far as contamination.
No, I was just more of like, okay, is this covered under just your homeowners, or is it covered as flood?
Okay.
So, but I guess
It's all
that
gonna
used to be a
be-
saying, I guess it's old.
Yeah, it's all going to be the root of how the water intruded into the home, and it has to be rising and flowing. So if it rained a lot, or if it was wind-driven rain and it came in through the ridge vents, that would be under your regular homeowner policy. It has to be flowing, rising and flowing to be flood. And so those poor people in Fort Myers, when Hurricane Ian came through, if they did not have flood insurance and all that water was rising and flowing into their home, and they had, 3 or 4 feet of water in their home, if they didn't have flood insurance, it was not a good outcome.
Well, most of them don't even have a home left to have rising water in.
Yeah,
It sweats right away, so.
right. All right, good questions, guys. Anyone else? Yeah.
I know you're talking flood right at the moment, but, I know that we had not me, but one of my customers had a flood, what do you call it now? The sinkhole.
Okay.
And so sinkhole damage, normally people don't have anymore on their policy. This person did. They had it for so long. And they told us we had that the information about that sinkhole would go on the tax records for future use for 5 years. So we had a hard time for 5 years.
Okay.
And is that something that the flood as well has to go on to say this person's house was flooded? And, because sometimes we don't look at those kind of things, and then it'll pop up, rear its little head.
All right, so when we go to quote a property, we quote, you tell us, hey, we want to go with frontline, right? So then we take the quote into application. At that point, we run something that's called a clue report. Clue report is similar to an MVR on your driving record. It's going to tell us if you have had any claims, or if the home you're purchasing has had any claims. So it follows the property, but it also follows you. So, like when you said you moved up
So
north.
Carfax, even though you didn't have the claim, it's gonna
Same idea.
check it off. that you have.
Absolutely,
Okay,
same
okay.
idea. So we're gonna run a clue report. When that comes back, we're gonna see if there was a sinkhole claim, or we're gonna see if there was a fire claim, or whatever type of claim it was. especially fire. They look at that a little bit differently. If your buyer is moving down from up north and they had a substantial fire claim, we're gonna have a conversation just to see, you know, what happened. Yeah. Is there a probability that that could happen again, or is it just a freak thing, or what have you? So we would need to have a conversation. So we're gonna find out about it regardless if it's still on property appraiser or not. Okay? Does that help? Does that answer your question? Okay. All right. Any other questions? Can I move on? I want to share some magical numbers with you today that need to be in the back of your mind when you're talking to potential sellers and or buyers. I've been in a lot of Watson offices this year, and most of the focus is on listings. Would you say that that's primarily the focus here as well, trying to get listings? Okay.
Listings means you're gonna get paid, right?
Exactly. All right. So, this is not good news, but the average roof age I have 10 to 15 years.
Yeah.
But in reality, it's closer to 10. Yeah. Remember, I brought brownies.
Let me tell you, somebody came out for the first time.
I need a
wanted
brownie.
a picture of my house, and I figured it would.
Could be, yeah.
First time.
So, once you are established with an insurance company and your roof becomes 15 years old, they most likely are not just going to cancel you like that. I was sharing, I don't know if it was here or someone else or somewhere else, but I have a 19-year-old roof on my home with Frontline.
Yeah.
And I chose to replace the roof on the little house I sold last year rather than replacing the roof on my primary home, because I wanted to replace everything on that little house that the insurance would care about so that I could sell the house, okay? So I know it's only a matter of time till I get a new roof on my house, but Frontline still has not canceled me. And when they offered me a renewal this year, we have a saying in our office, just write the check and say thank you.
Yeah.
Because I was happy that they offered me a renewal. So once you're in, they'll accept an older roof, but starting out as new business and a new policy, they are looking at roofs 10 to 15 years. All carriers are
10 to
different.
15 years left, or only 10
No,
to 15 years
old.
old?
Age, old, old.
Yeah, mine's 16.
Yeah.
So-
you have 30, and sometimes you have 50-year shingles.
Right. Now that 50, I don't know if you heard her comment about
30
getting
and
30 to 50-year-old shingles. That is pretty much a manufacturer's warranty on the shingle that they're telling you.
I mean, in Florida, we know they don't last that long.
Exactly.
But still, it's like,
With
wait,
the
you're only
heat.
taking a quarter of the light, or a third of the light?
So
It is Florida.
the heat, the sun penetrating down, you know,
What about a
I
tile?
have
Nine,
an
10.
18-year-old.
Sorry?
What about a tile, Spanish tile roof?
tile and metal roofs do have longer longevity with some carriers. Now, remember I mentioned we write for a lot of different carriers. They all have different guidelines. Frontline could say, oh yeah, we'll take that tile roof up to 25 years. Somebody else might say, nope, 10 years, doesn't matter what it's made of, we're only going with 10 years. So, I put 10 to 15 on here, but in reality, and grimly, it's really closer to 10. This is very important when you're talking to a potential seller, because they're not gonna wanna replace their roof. I'm telling you right now, they wanna sell their house. The last thing they wanna do is replace that roof. The problem is going to be that the buyer might not be able to get insurance if they have, and let's just say the roof is like 14 years, and you're talking to the seller in November. Well, in January then, that roof is gonna be 15 years old. So, it just really depends on the carrier. Yeah, and they're all over the board. Now, I mentioned that we work hand in hand with Watson Mortgage. Mark, tell me if I say something incorrect here. I have learned, and this is really a positive and wonderful reason why I tag team a lot with Watson Mortgage in meetings, because I actually learned this from Melanie. Let's just say there have been an agreement that the roof will be replaced immediately after closing. A few years ago, not that long ago, they used to give 30 days in which to replace a roof. Not a problem. That has not been the case for at least a year or more. But what they will do, and through Watson Mortgage I've heard, depending on what kind of loan it is, they will put money back in escrow, and they will put 1.5 times the roof money back in escrow. They need to have a signed contract by the roofer. They have to have a start date, which better be like the day of closing or the very next day. with a 2-week max completion date. And if we have that and can take that to our underwriter and say, we know this home needs a new roof, here's the contract, money's in escrow, 2-week completion date. If we have something, a document like that, that we can take to the underwriter, then we may be able to push that through and fly. And then what happens is they go to closing, tear off begins the day of closing or the next day, 2 weeks, and then I guess you could chime in on how and who gets paid with the money that's been put back on escrow.
Yeah, title company holds the money in an escrow account,
Okay.
and they'll pay the roofer directly.
Okay, so that is something that is a workaround, because, I can't imagine having that conversation with the seller, well, your roof is too old. But when it comes down to buyer, when it comes down to the buyer being eligible to get insurance,
Then you can't sell.
or you narrow your potential by just cash buyers only.
If it's an appraisal contingency.
Well, or you need to just prepare them that they may need to
In some cases, you
contribute
do escrow back
to, right, to buyer's escrow, if they don't have the funds to do it, right, finance it.
Right.
I do have another roofing question.
Yes.
I'm taking lots of questions. Solar. Now, someone told me that there's a potential that Florida insurers aren't gonna want solar because solar in a storm can do more damage to a roof. Because if the solar panels rip off, it's not just like the shingles coming off, but it could damage the whole roof and then cause water because it's secured to the roof. All right, so I wanted explanation
What's the
on that.
insurance company's position on solar?
Solar panels, no. Okay. One would think that the insurance companies are concerned about solar panels because of the way they are attached to the roof, right? Nailed, screwed, holes, something. But they're not. So some of our carriers will accept solar panels. Some of our carriers will accept net metering. That is when you have solar panels and you generate so much electricity that you are selling it back to FPL or Duke Energy, whoever you have up here. And then, so some carriers will also accept that, even though at that point, they're thinking that it's a business exposure because you are now selling your electric that you have
So are they
generated
not
back
gonna
to
cover you
us.
because you didn't disclose
The
it?
problem comes into play when FPL or Duke Energy wants to be listed on your homeowner policy as an additional interested party. Because of one, maybe you're leasing the solar panels from them, you don't really own them yet, okay? Or because of this business adventure that you've entered into them. So when they want to be listed as an additional interested party, that's where the problem really begins with solar panels. And so we were talking about a claim check earlier. If the homeowner has a claim, that claim check is gonna come in their name and the name of the mortgage company, and guess what? Now in the name of the electric company because they're listed on the policy as well.
So I guess to summarize it, you can get insured. Right? It just
we can.
might be a little more complicated and you'll find the company that will insure it. So we don't have to tell people, no, don't get solar in Florida. Because like my friend was in Las Vegas, they don't have hurricanes in Las Vegas, so they're not gonna probably blow off as much as they
Right.
would here. So that, that kind of came up and I didn't know if I was misinformed or if it was coming down, you know more about the stuff that's going on in Tallahassee and what they're fighting for.
I do, and with solar panels, it's still honestly kind of a mystery. We don't hear a lot about it, and what we do hear is usually not real positive, so I just share what I know.
And Shelley just mentioned to me too, and I agree with it, is it could invalidate the warranty on your roof.
Sure.
It has nothing to do with insurance, but
Sure.
you get the panels installed on your roof, now whoever put your roof on is saying, I should
Sure.
warranty that.
And again, you would
From the
think
bunch of holes
they
in
would
their
be, you would think they would be concerned about the way that they're installed. I have never heard of that being a concern from an insurance rep or insurance carrier or claim adjuster.
Somebody told me,
Not-
just make sure you have enough land to do the ones that are in the ground instead of your roof, and then you avoid that.
Oh, well, there you go. But then there's a liability, heaven forbid someone come running through the
Right, or
fire.
flies off in the neighbor's yard, and then.
I also wanted to point out, Mark had mentioned over here too, back on the other question about having to replace the roof, and let's say if it's a condition on the appraisal. And Mark, you want to share, I was asking the question, what if there's a requirement, the appraisal is contingent upon the roof being replaced? Can you close or do you have to wait for the roof to be replaced? And you were saying that,
Well, we've had it all with different variations of that. You've had roofers that'll do the work in advance and get paid at closing, on escrow,
but once a
funds.
mortgage has,
Oh, 'cause they
you
never
can still
finish it.
fund.
Yeah, because the work is done, so you had your re-inspection, the roofer's just waiting to get paid till the day of closing. Or, like Linda was saying, in some cases, depending on the loan type, you can escrow for it to be done after closing and still close.
I got you. That was my big question, was will Watson Mortgage allow that roof to be replaced post-close?
Depends on the loan type and everything, but yes, we've done it. The other issue with solar panels, which is insurance related, if we just had one, they're 90% of the time they're financed or leased, and when the person buying the home then has to assume, because you can't take them with you.
Right.
So they have to qualify for whatever $300, $400, $500 a month payment they're making on those solar panels when the next person buys that house, which could throw a monkey wrench into their eligibility.
I'm glad you brought that up, because I just heard about a scenario similar to that. It may have been from a Watson Mortgage person, I don't remember. But yeah, that's really true, because if they're leasing them, when the buyer comes along, they don't realize, and sometimes this is what I heard, I think it was not disclosed on the seller's disclosure. And then they found out after that they have to continue paying for these leased solar panels. Do you mind if I borrow this stool?
No, that's why it's there. I
Thank
can't.
you.
Yeah. I do.
You know?
I do.
Seat if you.
No, I'm good. I kind of want to be up high, so it's all good. Yes?
What's your stand on the people that, because I understand what you're saying about the solar panels and how they attach it to the roof. I had a customer that had some major leakage on about a 7-year roof because they had a dish up there, and the dish network, they don't care. Those guys come out, bam, 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 and leave. And that's what caused the huge leak, and they were not real happy about that, naturally, because the insurance company did not want to pay for it because they said that was a foreign object that they actually installed on their roof, and they don't cover things like that.
Now, as far as liability, I would think that the installer of that said satellite dish should come into play somewhere. Once they install it, do they caulk around it or seal around it or something so water can't be intruded down through where, those screws were or whatever. Because those installers should be licensed and bonded and have general liability insurance to take care of things of that nature.
Unfortunately, a lot of these companies, they don't.
I know.
And that becomes a real issue. I just wanted to mention it because it has been an issue.
Okay.
And so, if you're having a dish network put in, find a tree or something you can attach it to.
Exactly. Exactly. All right, great questions. This is great. All right, I was actually going to talk about solar panels, but it was only penciled in from one of my other classes a couple weeks ago. They said, can you talk about solar panels? So thank you for mentioning that. Okay. Any other questions on roofs or roof ages at this time? I did discuss if it is a tile or a metal roof, some carriers will allow a little bit more than 10 to 15 years, but some carriers will stick steadfast to that 10 to 15 years. So, all right, moving on. These are just some magical numbers I want you to keep in mind, and again, Rich will distribute the list so you'll have it. But these are just some things that you need to be aware of when you are talking with potential sellers. So next up is hot water heater. 14 years is the maximum age for a hot water heater. Now, again, we write for a lot of different carriers. I'm taking the average number. Some carriers might accept less, or some carriers might accept older hot water heaters, but for the most part, the average is 14 years. I have seen hot water heaters that are no rust, no dust, no leaking ever, never had a problem, look brand new, and they're 20 years old. It is not going to fly.
Isn't that crazy? I managed apartments and they lasted longer than the new ones we replaced, the original.
What about the tankless water heaters? Is that the same? Because it's really
I believe the tankless are a little bit more, but we have not really heard too much about.
They don't make them like they used to.
Well, isn't that the truth with a lot of things?
Yeah, the tankless was newer, and yeah,
I never looked at
Yeah.
but I don't think a lot of times they're mounted outside, so like if flooding, if they leak, it really is.
Well, what happens sometimes, if they're in the garage, then they leak through the drywall into the kitchen or whatever. Shelley, did you have a question?
Yeah, I was telling Rich that it used to be everything had to be in working order in order to close.
Now it's age.
Now it has to do with the insurability of the
Absolutely.
working order.
She was recommending we probably should have some sort of addendum to our contracts.
Yeah.
Oh, that's a good
It
idea.
is.
Well, because
Yes,
I
it
think it's
really
too,
is.
it's just filling up our landfill.
It's a contingent of buyer's
There's
ability to
nothing
get.
wrong with the water heater, why does it need replaced?
Exactly.
You know, it's just filling up
I
our
had one for
landfill, it's
18
not
years,
green.
an apartment's 30 years,
Where's our
and the new ones.
I think it's probably because damages that are caused by water heaters when they fail.
They do not
And
make
that
them
fail,
like they used
I mean, it
to.
can be 20 years
I'm
perfectly
sure they have
fine.
statistics on the average year when they do fail.
I'm sure the actuaries have it down to it. The actuaries have it down to, right?
Oh, yes.
All the actuaries do is find out when the failure point is. In this case, you're looking at it.
Right.
I think it depends on when it was made, you should be considered, because they
Right,
make
and the
things a
brand
lot
and all
more.
that. Did you
Well,
buy
and I'm sure-
Cadillac or?
I'm sure all these
They
numbers,
simplify.
I'm sure all these numbers are coming from statistics from
Yep.
claims.
Yep.
Quit that.
100%.
I want to go back to roofs for a minute. In the special session last May, they talked about insurance carriers could no longer decline coverage on a roof solely if the roof is 15 years or older. And everybody was so excited about this. Yay, we can start writing with some of these carriers again.
Find something.
Well, what they did then, and you know, I don't agree with this, but the insurance companies started changing their guidelines. So they said, well, in Central Florida, in the Solo counties, we're not gonna write homes that are over 8 years old. Or in Duval County, we're not gonna take any new business of homes that are over 12 years old. Well, that just eliminated that whole, they cannot decline coverage if solely, and they kept specifying the word solely, because the roof was 15 years old. So that kind of fizzled out. That is something that came about, and then they just changed their guidelines, so here we are back again. So I wanted to mention that. Okay, so hot water heater, 14 years is the max on those. Plumbing, no polybutylene. Older PEX can be an issue. Older cast iron and older galvanized can also be an issue. Okay? Electrical, just like we have a bad dog list, and you don't really hear too much about the bad dog list anymore because there's so many other negative things to keep an eye out for. However, there's also a bad electrical brand box list. So ineligible breaker boxes would be Zinsco, Sylvania, Federal Pacific, Challenger. Now the Challengers can sometimes be accepted by some carriers if the breakers have been replaced inside the Challenger box. And again, American Integrity, I use them a lot as an example, but American Integrity will accept a Challenger box if those breakers have been replaced. The problem is right now, American Integrity is only writing homes that are like 2 years old. You know, they have another product now. It's very similar. It's kind of like an a la carte policy. It still has the same coverages as a homeowner policy, but it's a little bit more expensive, so they do have a way for us to write with them. But that's a whole other story.
Linda, on the aluminum wiring, do they still allow Tapcon?
Yes. You have my notes back there?
No,
Oh,
no.
I guess you do. Yes, so on electrical then, no double taps, no aluminum wiring, but some carriers will accept aluminum wiring if they've been mitigated with the Alumicon caps.
Is that like when they do the pigtails with copper?
In every single one, in every.
Right, yes. And again, statistically, the aluminum wiring, statistically, bless you, has caused fires. So I'm sure that's where this list came from. In all honesty, probably the most common ones we hear about is Federal Pacific and Challenger. We don't hear too many about Zinsco and Sylvania anymore. And I always think of the old TVs. real
That
old
Pacific
TVs.
Challenger, all I hear.
Yeah. All right, so I want to say, and I can't stress this enough, 4-point inspections. Citizens requires a 4-point inspection if the home is over 20 years old. Some carriers will not require that until 30 years old, but we're going on the average with Citizens, so we're just going to say 20. You all are aware of what's on a 4-point inspection. Electrical, AC, plumbing, roof, and hot water heater. Okay, there's actually 5 items now. Any hazard any unacceptable marking on that 4-point inspection, anything negative, even a smidge, needs to be addressed either with the buyer, with the seller, with me, call us, let's talk about it. Any hazard, negative, anything on there needs to be talked about, because when it gets to the underwriter, it is going to be a big issue. It could be the smallest little thing to us, but when it gets to the underwriter, it's going to be an issue on that 4-point inspection. So if we can have that replaced or repaired prior to sending it in, that's what we need to do, and then have the inspector come back out and revise the 4-point, so that when it goes into the underwriter, it is squeaky clean and everything looks good. Okay? Any questions on the magical numbers or 4-point inspection? Yeah.
So if somebody has gotten the underwriter, or gotten approved for insurance, so that means there's no further anything needed, they're not gonna come back and say,
I'll get to that.
okay.
Okay, let's talk about claims. When we bind a policy, there cannot be any open claims on the property. Maybe the repairs have been made, but maybe the claim is still showing open on the clue report that I talked about earlier. Maybe the repairs have been made, but because there was a public adjuster and a roofer and an assignment of benefits involved, like I talked about earlier, maybe not all the vendors have gotten paid, so the claim is still showing open on the clue report. No open claims can be there existing when we bind coverage, and no existing damage. I got a call a couple months ago from a broker. She said, Linda, I have to ask you a question. I know what the answer is going to be, but I just have to ask and hear you say it. I'm like, okay. A tree fell on a house. Apparently there was a hole in the roof because the people moved out of the house. They decided they really just want to sell the house. And they turned in a claim and collected the money. Very important part. Okay. So they turned in a claim, collected the claim funds, decided they really just did not want to move back into the house, and they wanted to sell it as is. And was this a possibility? Well, you all know what my answer was to that. No.
With a hole in the roof.
Yeah, not to mention the insurance fraud, exactly.
Oh, yes.
So she goes, I knew what you were going to say. So the only way that could even happen, let's delete the insurance fraud out of that equation. The only way that maybe it could happen is if you had a cash buyer who was going to move in, repair it, maybe flip it, get insurance after the fact. However, with that then, we call it a no prior insurance situation. So if it took them 2 months to fix it, then they would have been without insurance for 2 months, and then there's a more difficult time where we can even get insurance on someone who has been a no prior situation. Yeah.
How would that happen though if the check is submitted to the mortgage company and the person owning the home?
Typically, that is only going to happen if the check is over $10,000. Not all claim checks are going to be made payable.
So it was a repair, not replace.
And it depends on the coverage too. So I believe coverage on the dwelling, where I talked about the check would be made payable to all parties. They break it down, check for the home, check for your personal contents that were damaged. So let's say there was water intrusion, soaked up in the attic, the insulation got wet, the drywall, it's now snowing in the living room because all that insulation fell and damaged your couch or your coffee table or what have you. So there would be a separate check sent for your personal contents inside the home. That check is just made payable to you.
Gotcha.
Okay? So it just really depends, but I think 10,000 is the amount that would be made payable to the mortgage company as well. Yeah.
You may cover this in a minute, but speaking of claims on a home that someone else was going to buy, can you explain, I seem to run into this all the time, and actually ran into this personally years ago when we bought our house. The insurance companies look back at the property, not at the person buying the home and trying to get insurance. And if there was a water intrusion claim from the seller, or some other sort of claim from the seller, the new buyer is in a lot of cases not eligible to get insurance because of what the seller did 2, 3, 4 years ago.
Right.
What is the thinking on that, the reasoning behind that?
They do look at the property that they're purchasing as well as the buyer. their claim history. I think basically they don't want to close on that deal and then right away have another water claim. So they just want to make sure that the damage that was done by that water intrusion has been repaired, replaced, just to make for sure that something like that is not going to happen again. They don't want to take on a risk and within the first 60 or 90 days, be buying a claim, so to speak.
And what's the usual look back, like 5 years?
Well, on homeowner claims, it's indefinite, yeah. Whereas on your driving record, they look back 3 to 5 years, but claims are gonna hang on there. And even if you turn in a claim and then you find out that it's below your deductible or whatever and it's closed without payment, it's still gonna stay on there. Okay?
Is that where the 4-point would come in then, to ensure that it's okay and then they would read?
Yes.
Okay, that's what.
Because they look for updates on the 4-point as well. It'll say, how old is the air conditioner, when was it last replaced, whatever, plumbing, electrical updates, that type of thing. So they would see.
What was how do you resolve that if it comes up? So, okay.
Yeah.
A 4-point.
Absolutely.
Okay.
I'm going to go back to roofs again too. Citizens will still accept a 25-year-old roof. However, they're going to want to see a roof inspection showing that there are at least 3 years of useful life left. And I talked about a closing in November. So let's say a 4-point's done in November and it says that there are 3 years of useful life left. Well, come January, now you're down to 2. So when that policy comes up for renewal the following November, you could get canceled because now you only have 2 years of useful life left on that roof. Exactly. All right, so we talked about claims, no open claims, no existing damage. Company inspections. You brought this up a little bit. After we go to closing, and the buyer is happy, the seller's happy, you're happy, I'm happy, everybody's happy. The insurance company is going to send out an inspector in the first 90 days of the policy to inspect the property. If they find anything at all that's unacceptable in their mind or what they see, they could legally get off the policy within the first 90 days. That's why I asked you how long it had been for the people that they thought they just got dropped. And the companies can legally do that within the first 90 days. So let's just say when the 4-point inspection was done, that it was high noon and the inspector did not see some lifting and curling shingles because the shadow of the trees were casting down upon the roof. Well, when the insurance company goes out to do their inspection, it's going to be discovered. So that's all the more reason why we really need to look at the 4-point inspections to make sure that there are no, let's just say he says the roof is good, but you see something that maybe, and I know you're not insurance experts or roof experts or electricians or plumbers, I get that. But if you see something that looks just kind of weird, like maybe it could be an issue, call me. Let's take a look at it. Because we don't want it to go haywire down the road, because I can tell you for sure, if the carrier cancels within the first 90 days, the first person that the buyer's probably going to call is you, and then they're going to call me, and nobody's going to be happy. Yes?
So, to avoid that, not just the 4-point, but and you guys can tell me since I'm kind of newer back to this area, obviously the cheapest inspector is not necessarily the best inspector, because you definitely want to know these things. And are the inspectors, if they're doing a 4-point, do they have some liability there?
Absolutely.
If it comes back, so they're guaranteeing, if you pay them for a 4-point, it's not, and 90 days, the insurance company comes in and you get dropped. Yeah, I'm gonna send them to that inspector and hold them liable, I just need to know.
Well, they should, but I had one recently where we didn't really talk about wind mitigation inspections.
How do we know it didn't happen afterwards?
Yeah, we didn't really talk about wind mitigation inspections. So 4 points are required. Wind mits are not required, but they'll almost always help with the insurance premium to bring it down to give cover or discounts. So what they do is they look at 9 different categories, how that roof is attached. One of the categories is, does it have SWR, which is secondary water resistance? And I'm sure you all know this, but if there's any newbies here, I'll just say, above the plywood is a peel and stick layer. So if the shingles were to blow off, the water would hit that peel and stick layer and repel instead of intruding into the home. So we had an inspection done where the prior Winmit said that they had SWR, or no, the prior Winmit said they did not have SWR, but she sent me the documents and they paid extra, and it was documented on the invoice and the paid receipt that they had the SWR installed when they had a new roof put on. So she called the inspector back out again, but he couldn't see it because it's between the plywood and the shingle. And when he was up in the attic, he couldn't see anywhere where that peel and stick had been installed. And so I don't know how it ended up, if she showed him the documentation or what, but he was able to revise the wind mitigation inspection and mark on there that it was a secondary water resistant, did in fact exist, to get a little bit more of a discount. And that was a Watson Realtor, so.
How would anybody?
Exactly. Exactly. So, but you know, I mean, when you have a new roof, you would know if you paid extra to have that done, because that's not something that they always do. Although I think I heard that code now is requiring in some areas that you have that done. So they can come out, like I said, in the first 90 days and cancel a policy if they see anything unacceptable at the property, okay? So I mentioned that we want to be your resource. We want to be there for you for any issues, concerns. We work hand in hand with Watson Mortgage every day. Anytime an application goes into Watson Mortgage, as a courtesy, the next day that information is downloaded to us, and as a courtesy, we provide homeowner insurance quotes to that buyer. No obligation, we just send it out congratulating them and send them insurance quotes. And then we want to have the conversation, of course, for their needs and wants of what they may need. But, you know, we want to be here for you. We are a family. You know, I just can't stress that enough. I appreciate your support so much. Who is here from the Orange Park office? Do we have anybody? Thank you, thank you, thank you. Are you aware that you were #2 with the most referrals company-wide to FIC for insurance quotes?
Wow.
So, yeah.
Does not know that.
Yeah.
We did not know what the
Thank you for your support. So, at this time, I have talked way too much, and I am like roasting up here, so what questions?
Oh my gosh, you need to come back here.
I turned it down to like 70 degrees here.
What additional?
He does it.
I should have worn my
It's
jacket,
cold.
but, you know, it's my
No, it just
Watson,
turned
my
me
Watson
down.
outfit.
Yeah, your Watson outfit.
So what other questions do you have for me?
It's the challenge.
Put me to the test.
How much is our insurance going up next time? Doubling again?
So let me tell you, in my family, if I owe you money or you owe me money, the price is always $5,000, and that's how I'm starting to answer that question. No matter what it is, $5,000.
Yeah, forget it.
I don't know. I
It's
honestly
over
don't
doubled
know.
in the past 2
Yeah,
years.
it really has.
It's crazy.
It is, and sadly, I think it's gonna get worse before it gets
You can't
better.
come with
But
a-
I don't know. I mean, I don't have a crystal ball.
It's gonna get worse. We already know.
What can you tell us that DeSantis or the government, local government, state and local government are doing to try to hedge?
I wish I had.
Is there any
The
other
things I
doing any-
mentioned,
Yeah,
that.
that's it.
Now, I did hear, and someone asked the question yesterday in St. Augustine about the 1% assessment fee that we're all gonna be charged starting in October.
What is the assessment fee?
Well, originally I thought it was to help citizens with their reinsurance, but I got an email this morning that that answer was incorrect. It is actually to help cover claims from UPC, United Property and Casualty, that just closed at the end of March. So everyone is going to be assessed 1% on their homeowner insurance to help cover those losses that UPC had prior to their closing their doors
So it's gonna go up.
by 1%.
1% of the current dwelling coverage?
I don't know if it's that or if it's the premium. They were not unclear, or they were not clear about that, they just said 1% assessment fee. But you know, it's probably gonna equal out to maybe, I don't know, $5, $10, $20, but still, that all adds up.
$11.
What?
$11
Oh.
for premium.
So we're all paying for it. All right. What else? What other questions? Anything at all?
What about open permits? Do you require that they
Assessment fee.
Assessment.
are closed?
Yes. Yes. And have a permit. You know, back in 2004 and 5, when Francis and Jean came through, it seems like forever ago now, At least in my area, permits were not even being pulled. Or if they were being pulled, they weren't being inspected after the fact because everybody in Brevard County has blue tarp on their roofs. And so then when wind mitigations came out and they were coming in and trying to figure out how old that roof is, there was no permit pulled. So yeah, I could say I had a new roof put on in 2005, but I couldn't really prove it because there were no permits. So yes, we absolutely pull those and look at those.
Is that just for all permits or just roofing permits?
Pretty much everything.
Yeah, because you can't really close without with an open permit.
Right. I mean, we would want
That's
to
the
know why
problem
it
in
was
Clay,
open.
that is the problem in Clay County, since when they just upgraded to the computer system and got in the real world, they only went back 10 years for permits. So, you know, we're all at a loss when it comes to some of that, we're not gonna have it. The only thing we did on the last week, they did still have their permit where they had gotten the permit to do the roof, but even with that, it was too long ago, they still might have put a new roof on after we went through all that.
Yeah.
So, I mean, I'm concerned because a lot of people did the right thing.
When was that? When did they convert over?
They just converted over, when we go to that meeting, October, November?
Oh, so you're gonna have to probably have to deal with that for the next few years then.
I
In the
had,
next 100.
the day after construction, I had a buyer put a kitchen, outdoor kitchen in the property.
Okay.
They came back to re-inspect, he wasn't home, so they didn't re-inspect it. So when we went to close on his house, he lived in it for 3 years, it showed an open permit, not inspected. To make a long story short, I called Clay County for him, got them on the phone. They couldn't find a record because they closed out the old files. And therefore it's carried forward as open, and they won't reopen them again on the new one because they don't have a record of where the permit was issued. I mean, it was a nightmare.
Wow, it sounds like.
But I finally found, there's a lot of nice people working in Clay County.
Yes.
And somebody took some
Yeah.
initiative on their own to went there and literally made a manual change in order to get him a inspector out there, inspected, got him cleared, got him closed,
Good.
But otherwise, you're just, it's the new federal government, new city government.
Yeah, I know we've dealt with that, with flood insurance and flood zone changes and map changes, and I've had to call the floodplain manager up here, and, you know, and here I am in Brevard County, I don't know, you know? But everyone's been very kind when I've had to do that, so. What other questions?
Will most carriers take, so in that case where there isn't a permit, or there wasn't a permit pulled, or a permit was lost, and a carrier's going by the last known permit, and they say, hey, your roof is 20 years old, we're gonna cancel you, but maybe it really is only 5 or 6 years old, will a certified roof inspection fix that, or will they strictly go by
No,
permit?
if there is documentation by a certified roof inspection or documentation, paid invoice, anything like that, yes. Any kind of documentation that we have to supply to the underwriter is gonna be to our benefit. Okay. Anyone else?
Can you go over your name, phone number, and web information?
It's right up
I
on the
can't read
board.
it, I can't read
Right
it.
here. I'll take a picture.
Sit closer.
Did you get this?
All right, well, don't take it down and I'll get it after the meeting.
All right.
I'm gonna
I'll
send,
send you,
I'm gonna send it
you
out.
my picture.
I really didn't know how many of you wonderful people were going to be here, so I don't think I gave these to the back row. You could just, pass some of these down.
Can't
One more,
see
yeah,
the
thanks, one more.
I'm trying to zoom in this thing so they can see it.
I have a picture of it. Do you want me to send it to the office?
No, I'm gonna send it out.
Official videographer.
Thank you.
Just a,
Now, you had your handwritten notes, are they gonna be in slides too? It is
Just a little bit of
Okay,
extra.
but it will be there, because that was a lot of information, some very good information.
So the slides is like a snippet of my notes.
Okay.
Of course, I added stories and examples that I've seen, and I know it's a lot of So, you know, it has been a pleasure to be here today. I have not been up here for a long time, but just know truly that we're here for you. We want to help you in any way that we can during this crazy time. We all know that it's crazy. And, you know, I think this idea of collectively lunch and learn all together was a great idea. I don't travel up here all the time anymore because if I can do 3 different office meetings on a Tuesday morning from my desk, I can reach out to so many more people than coming up to just one. So I love this idea. I visited some other offices this morning and kind of planted the seed of how you were doing this, and so hopefully they will hop on that too.
I have one last question.
Yeah.
Unless you I have a couple things I had to leave for, but in your crystal ball, people ask me all the time in a crystal ball, where are rates gonna be in 6 months or 8 months or whatever? In your crystal ball, as they've made all of these changes in Tallahassee and a lot of this, fly-by-night, roof scamming is kind of gone, where, do we see this settling down in a year or?
Probably 2 years.
2 years?
I can tell you that, I don't even know where I was, honestly. I feel it was in a Watson meeting and someone there sits on an insurance board, maybe in Central Florida. And he mentioned that right before April 1st, a large law firm called, I don't know, maybe the Office of Insurance Regulation or a carrier, somebody, and said, just so you know, we have 25,000 lawsuits coming your way. And they did that before April 1st because they knew that after April 1st, they could no longer do that. Yeah. So I don't know who the law firm was. I mean, he said it was a well-known big player, so it could be anybody.
Fair.
Probably bigger is better, I think it's Morgan.
Yeah, I thought Morgan too, but 25,000 lawsuits, 25,000 to get them in under the wire before. So I mean, it's going to be a while. But we're just so happy that the roofers aren't allowed to go canvassing. They still do, mind you. We're still hearing that they still go out, but the AOBs are prohibited. The one-way attorney fees are now ended. So we're happy about those things that did happen because for a long time they weren't doing anything. It just kept getting worse and worse and worse.
I literally had somebody suggested to me.
Were they
South Carolina, hey.
Were they losing cases? I'm sorry.
Yeah.
Were they losing cases or were they just settling out of court? Is that why
I'm not really sure.
why they went so high?
Yeah, I'm not really sure, to be honest with you.
Yeah, but you got 100,000 cases, it's cheaper to
Yeah,
pay them and scan it, I guess.
exactly.
Is Citizens just
Sure.
underfunded, is that what you're saying?
Well, yes, because they are ran through the state.
Because they're ran through the state.
Right, yeah. And they want to be thought of. She asked if Citizens was underfunded. They're ran through the state and they are the insurer of last resort and they want to be thought of as the insurer of last resort. And we think of them as that as well. So it's just going to get harder once they require flood insurance on every policy. I mean, it's going to take a few years to get to that point. But right now, if that property is listed in a high-risk flood zone and it's even a cash deal, Citizens, if that's the only place we can put it, Citizens is going to require that they carry flood insurance, even if it's a cash deal and no lender involved.
So you say you do the online, kind of process like this too? Would you notify Rich and you can notify us when you have these, because,
Well, usually I do it by invitation.
It's like an every 3-month catch-up.
Sure, absolutely. I mean, I do it by invitation.
Ray, if you remind me on it too, if we haven't seen one in a while, I'll invite Linda to come join us during one of our sales meetings. She could,
Right.
first 15, 20 minutes talk about what's going on.
Absolutely, absolutely.
Especially if you have a lot of changes in the industry.
Yeah,
Yes.
and I'm hoping that there will be some more changes coming, but honestly, I've been talking about this same content since January. I mean, Chelsea up at corporate wanted to know if I wanted to change my slides for next month, and first I said, no, don't put one in because it's just the same stuff, and then she reached out to me today asking if I'm sure. I said, well, you know what, just put the same slides in because I'm still talking about the same content and there's not a whole lot changing, so hopefully next time I'll have some better news for you. But I appreciate all of you so much and your relationships and your support, and it's so nice to come in and, I've known Richard for a long time and recognized him on the spot, and, I met you on an Ascend computer screen, and I've known Joseph for a long time, so it's just really nice to see familiar faces in person. So thank you again so much for having me, and reach out anytime.
Is he taking it
A little.
needed?
Yeah, can I see that video?
It's okay.
We're gonna post, we did record it. We will post the video so that you have access to it.
That's weird, I can't remember.
Thank everyone for coming. There's extra food. Please take food back to your admin too, in your office, if you're going, or